Well, plenty of stocks that are moving and shaking around. So let's get straight to our favorite segment, Movers and Shakers. And Anisha's with us. She's joining in to tell us about Jet Airways, some negative news flow early this morning. Anisha?
Good afternoon, Nigel. Well, yes, Jet Airways is coming under pressure today as the company informed exchanges yesterday that they have not been able to meet the principal as well as the interest outstanding dues to the banks as of 31st December 2018. Now, they haven't given any explicit details, but they did say that these were the amounts due to Indian Banks Consortium, which was led by State Bank of India. And do remember that as of June 2018, their total gross debt was around 8,600 crores. Add to that the payables, and the total outstanding was close to around 12 to 14,000 odd crores. Now we know that the company has been facing this cash mismatch. They have not been able to pay salaries to their pilots, etc. There were talks that there might be a deal with Etihad, but that hasn't come through. And in the interim, they continue to face cash shortage. And you can see the reaction on the stock as well, down about 2% in trade.
Okay. Well, thanks a lot for that. Jet Airways under pressure, but though it started off much more under pressure, expectations are some Etihad line will come in sooner or later. Nigel, metal stocks not doing too well.
Yes, CLSA, they have come out with a note and they're fairly cautious on the sector. In fact, they have downgraded various stocks. So they've cut the EPS estimates on various metal companies by 9 to around 38% odd. The two factors that they're citing is lower commodity prices and secondly, a stronger Indian rupee. They say that going ahead, they're expecting estimates to get cut. Now, importantly, they're saying that 2019, they're not expecting Chinese demand to really go through the roof. So that's point number one. And the second factor is from the ferrous space, the Chinese steel exports have started picking up. Remember, in the last 18 months or so, the big story was that the Chinese exports have slowed down. So if you just pull up the data point, for 2017, there was a contraction out there to the tune of around 30%. And for the first 8 months of this year as well, there was a contraction in Chinese exports, Chinese steel exports. But in the last 3 months, that number has done a bit of a reversal, and that's not very, very good news. Citing all these factors, they have downgraded Tata Steel as well as JSW Steel. Sharp target price cut on Tata Steel all the way from around 800 rupees to around 450 rupees. On JSW Steel to around 260 rupees from more than 350 rupees. On the non-ferrous space, they're fairly positive in comparison to the the ferrous space, but on Hindalco they have cut the target price to around 210 rupees, though they maintain their buy rating on Vedanta as well as on Coal India, though they have trimmed the target prices on both these two stocks. Vedanta buy rating, but target price down from 300 to 250. Vedanta as well, they've cut the target price out there as well. So keep an eye out on all these stocks.
Okay. We'll keep an eye out also on that line that went on your ticker screen, saying that Yes Bank has cut lending rates, if I'm not mistaken, by 1 to 5 basis points. Well, most of the banks are actually hiking lending rates. Yes Bank has cut, but it is quite possible that in the October month when money was tight, they borrowed expensive, and now that is getting replaced by cheaper deposits or CDs. And that's why probably this is a near-term change in the cost of money only for Yes Bank. Otherwise, the secular trend has been banks upping their MCLR by not much, 5 to 10 basis points. Okay, with that, I want a word more on the banking stocks itself. There are a bunch of banking stocks that are higher today. The bank index is outperforming, but that's not the point. It is, stocks like, say, DCB, Federal, and a whole lot of smaller PSU banks, IOBs, that you should look out for. This is because of the Reserve Bank's step that MSME loans can be recast. Basically, loans given to medium and small enterprises, which are standard as of yesterday, have not become NPA, can be recast so that even if you are expecting them to get into trouble, you have given them a one-year moratorium. Up until March 2020, you can do that. Kotak says that the total amount of loans given to the MSME sector is about 13 lakh crores. ICRA had a number of 10 lakh crore of loans given to MSMEs under 25 crore. But the point is, some of these banks will be saved the blushes. The normal NPA in that sector is 11%. That is the last RBI financial stability report we have. So if possibly the incremental 11% of bad loans has been pushed down by about 5 quarters, and maybe by then they will even recover. So positive for a lot of banks, especially those which are servicing SMEs. Like I would say, many of the second tier PSU banks and second-tier private banks.
All right, Lata, thanks so much for that. Well, in terms of the metal stocks, we're not done. One stock that's holding in the green is NMDC. Next week, that's on Jan 8th, they're going to be a meeting to consider a buyback. Fundamentally, things haven't really turned. The Donamalai mine is still shut down in Karnataka, and prices have been cut by other private member miners in Odisha. But for the time being, this is giving them a bit of a lifeline. They're going to be doing a buyback. Remember, the total net worth is around 26,000 crores. So if they do a buyback for around 10% of that, that will be nearly around 2,600 crores. Who stands to gain the most? The Government of India, because they have more than 72% stake in the company. And the other big holder is insurance companies. They hold nearly around 15% odd. So we'll keep an eye on this stock, but that's the only reason why this stock is outperforming today.
Actually, for a long-only fund, this can actually be negative because they would have rather wanted that money used for expansion. But immediately, of course, it's a trigger because if you own the stock, you can sell it to the company back. Okay, but the big story of the day, quite clearly, are auto sales numbers. They've disappointed, but for the fine print, Nimesh is here.
Well, clearly disappointment, Lata. In fact, the last lot, the Hero Honda is also disappointed in terms of the monthly sales. So they reported a sales of 4.5 lakh units versus Nomura's expectation of 4.8 lakhs. If you look at YY comparison, the total sales are down 4% for Hero Honda. But the biggest stock today is clearly Eicher Motors. We spoke in the morning as well. The stock is now down 7% on the back of a very disappointing monthly sales data. So they reported a sales of 58,000 units. Down 13% YOY and very much lower than what Nomura was expecting of close to 73,000 units. So that's a big disappointment coming in. In fact, most of the brokerages have posted the numbers, have lowered the full year FY19 and FY20 volumes estimate as well as EPS estimate by between 6 to 9% for FY19 and FY20. So clearly not going down well as far as Eicher is concerned. Ashok Leyland, again a disappointment. Total sales are down 20% YOY and they've missed Nomura's expectation by a good margin. The only best part for Ashok Leyland was the lower commercial vehicle sales were up 27% YOY. So that's a bit of a grace for Ashok Leyland. Otherwise, again a disappointment. Similar was the case with Bajaj Auto as well. I guess, if you look at all the numbers which are now out, within two-wheelers, what stood out for me was Bajaj Auto. Despite lower than Nomura expectations, still it was up 18% YOY. And in terms of tractor sales, Eicher yesterday reported a decent set of numbers. Escort reported a decent set of numbers. Barring these two, most of the guys have reported very disappointing numbers. In fact, Motilal has gone ahead and cut the EPS for both Maruti and Eicher Motor after the December sales numbers.
Okay, all right, Nimesh, thanks so much for that. Well, we spoke to the managements of Mahindra & Mahindra and Bajaj Auto earlier today. Let's hear out what they had to tell us.
January, February, March should see sort of true reflection of where the demand is. I would not say that there has not been some softening of sentiment, some softening of demand. There has been. But I think it's all led simply by what happened in October and September because of everything kind of being wrong at that time. The interest rates, the exchange rate, the oil prices, commodity prices, and I think that's what we are seeing in November, December also. And therefore, I would expect some turnaround in January, February, March, though I must admit that last year, January, February, March was a very high base. And therefore, to get a significant increase from last year will be a reasonably difficult thing to do.
The domestic commercial vehicles, you see a decline because you see last December was a little bit of a bumper month because there was a significant release of permits in Mumbai, and in Mumbai market we have like a 95-96% market share. So you're seeing the base effect, but we are not at all concerned about any slowdown in the CV domestic business for January and February, March. I think that we should start to see slightly better numbers, growth numbers for the domestic motorcycles industry. Large parts of Africa and the entire Latin America in exports, the retail sales peak between a period of October to December. You will actually see a slowdown in the exports business from December to Feb. And but the underlying, there is no underlying issue over there. We will see slightly lower numbers in exports, but that's just a season effect.
Actually, the Bajaj Auto management, even for that matter, the M&M management, were not very negative about the current quarter. But Hero Honda actually sounded a little more worried, because you actually, along with the press release of the numbers, got a statement from Pawan Munjal saying that he thinks what is needed to keep the sales going is a cut in the GST rate. He doesn't believe it merits a 28% GST. We'll try and get you more on that argument, but that's the point that Pawan Munjal of Hero Moto is making. Before we wind down on this segment, let's leave you with an opinion we got on this impact of the RBI's forbearance for MSME companies. Their loans can be restructured once without those loans being called an NPA. Hear out what MB Mahesh, the expert on banking from Kotak Institutional Equities, had to say.
There may not be a significant change in our estimates for the banks that are under coverage, but there will always be a few PSU banks, especially those which are under the PCA, which probably could stand to benefit out of this relaxation. We'll probably wait for probably another close to about 3 to 6 months to see who are the prime beneficiaries. But on the face of it, you could probably assign it to a little bit more favorable outlook for some of the PSU banks. The early warning indicators kind of reaffirms this hypothesis that from here onwards, you should see fresh additions to NPLs declining, and on the other side, you should also see an improvement coming through as the resolution activity picks up across the sectors out there. In general, there's no clear sectors out there which is pending to be recognized. There might be a few large corporate accounts, but in general, we don't see any new accounts, new sectors which is of critical significance from a banking sector, which is yet to be recognized.